Have you ever thought of a life where you can live off a beautiful beach, enjoying sunset every day, and work? You don't need that anymore because you're living off dividend income from the stocks that you invested. But is it possible? Yes, it is, if you understand how to pick a good dividend stock. So here in this video, I will be showing you the 5 steps to pick a good dividend stock. Hi, welcome back to Mr. Money TV, your favorite financial edutainment network. Here we are, all about learning finance in a fun way. So if you like that, click the subscribe button and turn on the notification to follow us for the latest video. Also, do follow us on Facebook and Instagram for the latest activities and updates. Having great stocks that pay you dividend can be very rewarding investment in your portfolio. This makes your money work for you and generate for you a consistent income when you decide to retire. But certainly, picking good dividend stock is never an accident. It is a well-planned investment that requires a certain set of skill and knowledge. Before we talk about how to pick a good dividend stock, let us talk about why dividend stocks and what's so special about it. Let's take a look at dividend profits. Say you bought 1,000 shares at 2 ringgit per unit, and at the end of the year, the company declares a dividend of 10 cents per share. This means you will get 10 cents times 1,000 shares. That's 100 ringgit. This 100 ringgit will be banked into your bank account, and you can use this money whichever way you prefer, whether to spend it on a holiday or reinvest it to buy more shares. Well, the point is, it doesn't require you to sell any stocks in the market. So dividend is money going into your pocket, and that's why dividend investing strategy tends to be a favorable strategy for those who want to build an income from their portfolio. Since we have talked about what's the benefit of dividend stock investing and who is it for, now it's time that we take a look at the 5 steps that you need to know on how to pick a good dividend stock. The first step, look for a stock that has a dividend yield of more than the current fixed deposit rate, which is around 2% at the current day. Well, this is simple, right? We all know that investing in stock is much higher risk than investing in fixed deposit. There's always a risk of capital loss. So if you are going to take that risk, you certainly want to be rewarded accordingly. Why take the extra risk when you can only get back the same return from fixed deposit? Dividend investing strategy is about building a steady stream of dividend income. You want to have a dividend yield that is more than the current FD rate. Step number 2, avoid the high dividend yield trap. In the last video, we have shared what a dividend yield trap looks like and how you can avoid it. For those of you who missed it, can check it out from the link here or here. While the high dividend yield can be attractive and keep you excited, especially when you manage to find one, but solely depending on the high dividend yield to make investment decisions can be extremely dangerous, because a high dividend yield can sometimes be a misleading illusion due to the drop in the company's market value. So what should you look at? First, check if the company has a proven track record of dividend payout. Are they consistently paying out dividends over the years? And what is the value of the dividend that's paid out? Is the value growing? For example, maybe in 2018 they paid 28 cents per share, and in 2019 they paid 35 cents per share. That is growth in value, because the growth in dividend value will tell you if the company is really making money and it's really growing its dividend for its shareholder. Therefore, focus on the growth in dividend value, not just high dividend yield. Also, do remember that you do not want to include the special dividend payout, as that's not part of the regular dividend payout. It's a bonus that happens one-off. What you want to look for is the regular dividend. Step number 3, look for a sustainable company with a good future prospect. A company can only pay a sustainable dividend if the company is making money. So you want to make sure that the company that you are investing is fundamentally strong and robust for the many years to come, because a performing company will continuously generate earnings or even grow their earnings. That way, they are able to pay out dividend to you as a shareholder. Generally, you can assess a company performance by looking into their financial statement. For dividend investment strategy, you want to look for a company with an earning growth of at least 4% over the last 7 years. Besides, you need to also understand what is the business model of the company, what is their future plan, is the company competitive enough, and what is their economic mode. This will help you to better determine whether the company that you are investing has a good future prospect to grow their business. When the business is growing, potentially the dividends will grow in the future as well. Remember, a company has to be performing well over the years to pay out a healthy dividend to its shareholder. Step number 4, assess the company's free cash flow. Free cash flow shows how effectively a company is in generating cash from its business operation. Free cash flow is the cash left in the company after a company pays for the operating expenses and capital expenditure. With this, the company can pay dividend to its shareholders from their free cash flow. So, free cash flow is extremely important if you want to invest in good dividend paying stock. In a way, we can say no free cash flow, no dividend. Besides, would you want to invest in a company that shows you 1 billion in profit but there's no cash in their bank account? So invest in a company that has stable free cash flow over the years. After all, cash is king. We can't stop emphasizing on that. On top of that, you should also pay attention to where the free cash flow is coming from. Is it coming from profit or selling its asset or even borrowings? Why does this matter? Imagine if a company has been borrowing money to pay their shareholders dividend, or maybe the company is just selling their assets every year to pay dividend. Do you think that's sustainable? I'm pretty sure you won't want to invest in a company like that, right? In short, do make sure that the company is able to generate free cash flow from their business operation. Last step, identify a company with a good dividend payout ratio. Dividend payout ratio shows how much dividend a company is paying out from its portion of profit. If a company is paying 50 cents of dividend per share from their earning of 1 ringgit per share, the dividend payout ratio will be 50%. So, what kind of payout ratio is considered to be good for a dividend investor? Look for a company with a dividend payout ratio of at least 50% to 85%. That way, the company will be able to give good portion of its profits back to its shareholder as dividend, while they also have some cash left to reinvest back into the company to grow its business and potentially increase the dividend value in future. How can you identify such a company? Look for a company whose business model doesn't require a massive amount of capital to grow their business. Or look for a large or mid-cap company that is stable enough and is not seeking huge reinvestment to grow aggressively. Since they do not need money to grow aggressively or reinvest the profit to run their business, or in need of huge capital to run their day-to-day operations, companies like that are more likely to distribute more profits to their shareholder as dividend. So, for those of you who are looking to build a stock portfolio that can generate you sustainable dividend income over the years, these are the 5 simple steps that you should follow to build that stock dividend income so you can live a life of financial freedom. So what are you waiting for? Start looking around and start doing your research to find that good dividend stock to invest in, and share with us which stock you think fits your dividend portfolio. Or share with us what are some of the tips and tricks that you use to look for dividend stock. We look forward to see your comments. I'll see you next time. Having a great stock, pay your dividend. Having a great stock that pay